Right, so let's do this. Technology has been a bit funny, but we finally, I think, got it good. So I think everybody's starting to come through now. Let's see who's here. Who are the participants? Okay. Who's waiting? Who is waiting? There we go. Excellent. So for those of you who've been kicked out, please try and get back in, but I think we finally got this up and running. So, like I was saying earlier on, financial markets are not just about getting in and selling and buying willy-nilly. You want to have some cadence to what you're doing. You need to prepare yourself. You need to prepare yourself. And I usually like to prepare myself for the week ahead over the weekend. Now, you can see my chart that's showing basically the things I was working on during the week. Bear in mind, this session is supposed to be, is primarily geared towards people who have traded on some level before. So there's some things that I'm not going to take the time to teach the newcomers. If it doesn't make sense, just make notes, write questions down, ask me on the group. I'll either answer them or tell you it's coming in a lesson. So this is how I like to work. Now, these charts here are charts that I'm already dealing with. So I'm going to open up a new one. Okay, I think I can use this one. There's nothing on this one. So if you're listening to this, you probably know that there's several time frames. There's a monthly time frame which measures price on a monthly basis. In essence, every candlestick represents 1 month. There's a week, a day, a H4, a H1, 30 minutes, 15 minutes, 5 minutes, and 1 minute. And literally all that it is doing is representing the same flow of price action. We call this price action for the newcomers. It shows what price, the movement of the price of a currency pair looks like in a different time frame. So obviously, if you're looking at a monthly time frame here, we can look all the way back to, to 1997. If we use a week, you're limited in how far back you can go and stuff of that nature. So you can, the larger time frames allow you to see more price action in one go at a certain time. The smaller time frames help you to drill further in and refine your level so that you can actually get closer to the action. So this small candle here on a weekly basis was last week's price action. That is 109 pips in that small candle. If I go down to a minute, you see this big candle in the minute here? That is, this seemingly big candle is 4 pips. So don't be fooled by the size of the candles, and sometimes they're not always to scale. You just need to know what you're working with. So I am a day trader, meaning I like to be in and out of the market on the same day. I put my trade in the morning, I'm out in the evening. Sometimes I'll be an intra-week trader, which means I get in, say, Tuesday, get out on Thursday. So my analysis is going to be geared for today. I will do some analysis sessions in the future with people who are more either scalpers, meaning you're in and out in 10, 15 minutes, or people who are more long-term swing traders. You spend weeks in the market. But for today, being the first analysis session, I'm going to analyze the way I work. So as a day trader, you might want to write this down, everybody. Whatever kind of trader you are, you want to have 3 charts open at every point in time. You want to have your setup chart. Take that back. You want to have your key levels chart, your setup chart, and your execution chart. In essence, your analysis chart, which is a chart, it's the largest time frame you're looking at, which is where you're plotting key levels that are necessary to or that are important to the kinds of trades you want to make. I'll show you what I mean by that in a second. Meaning, there's certain price levels, and we're price action traders. We don't believe in fancy indicators or fancy bells and whistles. We believe that the price we see on our chart is telling us a story that is telling us all we need to know about whether or not we're going long or short. And so I'm just going to take my hat off because it's a bit warm, getting a bit warm in my office. And so we are looking at a certain chart level for a certain time frame, for key levels. We're going to wait for price to get to those levels, and until it gets there, actually, no, I'll take that back. That's analysis. That's the setup chart. So on the levels chart, you're looking at key price levels where you expect price to do something. These are the macro ranges you expect it to move between. On the analysis chart, you are waiting for price to hit those levels. You do nothing till it hits those levels. If it doesn't hit that level during the week or any of the levels you marked out during the week, you don't trade. And this is part of where most new traders fail. They don't have the discipline to sit through things that they think, oh, I can make money here, I can make money there. No matter how much money you think you can make here or there, if you just jump in and out, you're likely to get in trouble. And so you are waiting for key levels on your analysis time frame. Welcome, Glenn. And then you have an execution time frame, which is where you are keying your trades and planning your stop losses, your entries, and your take profits. So I repeat, three time frames you should be looking at all times: a levels frame, an analysis or setup frame. So an analysis frame is the levels frame, a setup frame, and an execution frame. And this is the key for me. They're usually one price level apart. So for instance, I'll give you an example. If my analysis frame is a weekly, then I'm looking for my setups on that H4, and then I am doing my execution on the 15-minute or the 30-minute. I like the 15-minute. It works well for day trading. If my analysis or if my levels is the monthly, then I'm looking for my setup on the daily, and I'm executing on the 1 hour. But for the sake of today, I'm going to go weekly, daily, weekly H4 15 minutes. So let's look at the weekly chart. Now this is something you should get used to doing every single week. I'm going to take you through something real quick every single week. Where are we in the range of the chart? So again, if you're a new trader, please forgive me. Some things I say will not make sense for now. So I'm going to delineate the high, and I have a cadence of my arrows. When I'm marking the boundaries on charts, I'm usually doing that with a full black arrow, a full black thin arrow. So that shows me that that's a boundary. My different arrows mean different things. And that's the bottom. Now, for now, this is all we need because we're looking at a week. This is going back to 2016. So this is 3 years worth of data. So there are, if you scroll backwards, you'll find out that there are higher levels in the past, but for now we don't need them because it's going to take us a long time to break through these boundaries. Now, if we were somewhere up here, I would go back and look for a slightly higher reference point. But for now, since it's the weekly, that's the range. That's the first thing you want to do. Let me take the dividers off. So that's the high of the range, that's the low of the range. We're somewhere in the middle of the range. Why is this important? Because the big fish, like we've been talking about in the experience group, those who really drive price, the banks, the institutions, the billion-dollar hedge funds, they are what we call position traders. Position traders means that they trade the monthly and the weekly charts. They're planning their moves over a long period of time. It helps them mitigate their risk. It also helps them engineer the market correctly. And so this is where we are. Now, this is where we start to move into territory that some of you may not recognize, but just stick with me over the course of a few weeks to make sense. I'm going to draw Fibonacci. If you don't know what a Fibonacci is, just be patient. You'll learn it in the coming weeks. Where are we in this range? Now, price started down here, went all the way up here, and retraced. Glenn, this will make sense to you. It did something we call a market structure break. So let me take the Fibonacci away first. You know what, I'm just going to go quickly because if I take the time to explain every single thing, for those of you who are inexperienced, we will be here all day. So just Just listen to it over and over again and ask questions. So we have a market structure break here. So price went here. Once it broke this level here, it told us that we were bullish. So at this point, we're expecting a rally in price. Now, the other fundamental factors that let me know we're expecting a rally in price on the long term, and by long term, we mean over several months. So it may still go down for weeks and at a go, but long term, we're looking at a bullish movement. Now, I don't have time to show you that today. I have to teach you that in the mentorship. But there's certain fundamental factors that I have come to the conclusion that I'm expecting over the course of the next year or so, the euro to go up against the dollar. So this is on the weekly chart. So my weekly direction is bullish. That means nothing at the moment, but it's good to know. My weekly direction is bullish. Now we put on the Fibonacci. We find out where are we, because when we go up here and we start to come down, we are expecting to come down into the 50 level. 50 is halfway point. It's what one of my mentors, one of the people that I studied from trading from years ago, he calls it fair value. So if I'm expecting it to go north, once it breaks this level, once it starts to retrace, once it's formed that, it starts to retrace, and it's also broken this structure here, which tells me now that it's going down. I expect that to come into the 50 level. Once it comes down into the 50 level, I can start hunting shorts, longs, coming back. There's something we call the sweet spot on the Fibonacci. It's between the 61.8 and the 78.6. So this level here, I'm going to put it, you might have seen this on my other charts. I'm just going to insert that there, a triangle there. This is where I would usually be expecting a reaction of some sort. In line with my cadence, I have color schemes to let me know what different shapes mean on different levels. My weekly, one second, let me just put, my weekly color scheme is this color, saddle brown. So when I go down my chart levels, whichever level I get to, let me squeeze this in. When I see that color, I know that's a weekly level. So I know where I am in the market at all times. So coming back there, so you can have a different color for your own charts. Just something that works for you. You don't even need to have a color, but I just find it works well for me. So we're in here. So I'm expecting some sort of bounce somewhere in here. Now, this, and also, again, for the newcomers, we talk about price being fractal. It means the same rules work on all time frames. The same things that work on the high time frames work on the lower time frame. So let me unmute you guys in case you want to ask questions. Let me unmute you. Feel free to stop at any time and ask a question if you want. Actually, I will leave you muted. If you want to ask a question, just unmute yourself. Now, one second. Did you say you wanted me to slow down? Or were you talking to somebody else there? All right. So there's something here called a fair value gap. Again, if you don't understand it, I won't explain it for now. You can ask me the question later on the group. It's called a fair value gap. And what it simply means by fair value gap is, you see, if you look at this here, let me squeeze that back in. You see that gap in there? By the way, I'm looking at the EU right now. That's a huge gap on a weekly chart. It's several pips huge, long on a weekly chart. That's 57 pips where price just jumped. It didn't trade gradually into it. It just jumped. That's usually a sign that at some point it's coming back to fill that gap. Now, because it's a weekly chart, it could take a year to come back and fill it, but we have to bear in mind that that level there is very important. So, which is probably one of the reasons why price hasn't taken off yet, because it may be trying to come back and fill that gap there. So we have to bear that in mind when we're doing our analysis. The price might want to come back and fill that gap, but we don't know when it's going to come back. I'm just going to put that there real quick and move on. But it's roughly in the area we expect it to start to drive back up based on my macro analysis. But for the last few weeks, it's been going down. You can see on the general, it's going down. There have been a few up weeks, but generally it's been a down week. Now I'm going to refine this level here into something smaller. It's called an order block. So that there, again, if you don't know what an order block is, bear with me. But you see this down candle here, this black candle here, and then drove up. That's what we call an order block. It's a level at which we expect price to move up, and we are in it right now, and we have seen a reaction. Now, it's been bouncing around there for a while. So the summary of all I've done is to say that we're at a level where we could see an up move, a sharp up move from there, but price could want to come back down and close this gap and come back down into this level here. Into this level here. So because of that, on a weekly, we are slightly undecided as to what we want to do, which is okay. Now, sometimes you can get clear direction from a weekly and then you start to move up. But we're slightly undecided, but we do know we're at a level that is significant. So we go down now to a daily. We transpose those levels to a daily, so we leave those levels in. And this is what's going on the daily chart. Now, remember I said I would go from the weekly to the H4. That is true. Let me take this line off that shows the mark where we broke structure. Actually, I'll leave that there because these are significant levels that we need to look at when we go further down. So we're going to be looking for setups on the H4, but the daily chart is a king, whatever level you trade, because it is where the institutions usually engineer their liquidity. So wherever you're trading, you want to know where you are on a daily chart. And it also helps with giving what we call directional bias. So this is the daily chart. This was yesterday. Let me put the dividers back. So each divider is delineating a month on the daily chart. So this is one whole month, another month, another month, another month. So for instance, let me insert this just to show you what I mean. Text. So right now we're in October. So this divider is telling us that this is October. So between here and here is October. Now again, if we scrunch it up on the weekly chart, we see a bit further, that's where we are on the weekly range. So we're far away from the top of the range, and we're far away from the bottom of the range. So to get down here or to get up here is usually going to take months. So we want to create a daily range now that we're going to be working with over the next few days. So we're looking at highs and lows. That's what I mean by ranges, highs and lows. Where are we in the daily between highs and lows? That's the closest high to where we are. And obviously, the closest low that we have just formed, let me put this up here. The closest low that we have just formed is down here. There we go. So that's the range we're in. And on a daily chart, because we're in that range, it could take us a few days to break out of there. But we're getting towards the top of the range. So I think the bottom of the range is still valid because for the next week, we're unlikely to break through the bottom of this range for the next at least 4 days into the week. But we're near the top of the range. So we want to get a slightly further range just in case we break that top one. So we know where we are, we know what we can do. Again, let me move this all the way up there. Right, so what am I doing? Yes. I should have added that for the sake of time, I'm only going to do EU today because of time. You guys can go do any of the other pairs that you trade. EU is my favorite pair. Pairs that you trade using the same principle. It will work for anything. And so that's my range. In essence, over the next week, I'm expecting price to either get here or there. I don't really expect it to move beyond these boundaries. It could be a barn burner of a week, but from here to here is a range of almost 300 pips, 280 pips. That's more than ample for a week. If I take the smaller range, it is 222 pips. Now, from where we are in the range, to the top of the range is 120 pips, to the bottom is 150. Okay, on that basis, I usually like to have a 200 pip range for a week. Let's add a third one here. So this should be more than enough. In essence, I'm only going to plan this week for what happens between these boundaries. If price exceeds these boundaries, I will have to come back and reanalyze. So here, 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 and here. Let me, again, I need to change the color cadences so we know when we see a color. So that's a weekly level, saddle brown. These are the weekly level. So we know when we see a line, because it's very important. When we see a line during the week, we want to know where it's coming from. I'm going to take off this Fibonacci now. We don't need it moving forward. It was just to show us where we were in the weekly range. When we come to a line during the week, we want to know where is this line coming from? What's it respecting? Because the higher the time frame a level is on, the more valid it is. In essence, a weekly level is going to be a lot stronger than a daily level. A daily level is going to be much stronger than a 4-hour level, and all the way down the line. So when you come up to weekly or monthly levels, when you're trading during the week, you want to give them all the respect in the world. It's like a local government or an MP in the UK, a councillor is lower than an MP is lower than a minister is lower than a prime minister. And for those of us in Nigeria or the States, a local government chairman is lower than a governor is lower than a senator is lower than a president. So you want to know what level of dignitary you are dealing with when you come across them during the week, because the higher they are up the food chain, the more price is likely to respect them. So let me put these in. So those are the weekly levels that we're interested in. We're not likely to come to any of them or majority of them for a while this week. We go back to the daily now. My cadence of the daily is green or black, but I'm going to use green for the daily. So these are daily levels. Let's put them in green. Pardon me, time-wise. Quickly put them in green. So when we come to them during the week, we know these are daily levels again. If you're trading intra-week, daily levels are king, because you're more likely to meet a daily level than a weekly level because they're so far away. But when you meet them, you need to respect them. You use them for entries, exits, to let you know what the directional bias is.
Sorry, Israel, what are these green levels that you're marking?
Daily levels. Green for me is daily. So when I see green,
the daily highs.
Well, I'm afraid daily highs and lows. Yeah. So,
okay.
Yeah, but any level, highs, lows, order blocks, anything that is I got off a daily chart, I will put in green. So this is the range I'm working with. Now the next question is, what's my directional bias for the week? What do I think the week is going to be? Do I think it's going to be an up week or down week? For that, I go back to the weekly chart. I look at the order flow. This is what I call institutional order flow. Now, it's strange because normally if this weekly high here was further up, I would have expected price to keep rallying. But there is a weekly order block here, which tells me that price is in a consolidation. So I'm going to put that here. This is the weekly order block. Actually, that's not a line I want. I want an order block. So I want a shape. This is so quick when I do it on my own, but now that I'm having to carry you along and realizing how, anyway, so that's that there. So it tells me that price is trying to figure out what it wants to do. So I can't really trust the week on that because price is trying to figure out what it wants to do. So come to the day, what's it likely to do? I'm going to delete that chart on the daily chart. This is what I call a price pivot level. This is a point in which the price is likely to either turn, which is why it retraced. So for those of you who wondered why I got out of my trade on, let me show you on another chart, early on the EU during the week, that's the same level there. Now this is my 15-minute color. That's the same level there. Once price pushed up into that level, see that there, right? I knew it was likely to reverse. So I got out at that point. Now for this week, going back to our analysis chart, I wanted to give me some direction. In this point is not clear. I'm looking for either price to break through this level strongly. So I want to see it clear that level very strongly. A nice move to that side. Or a move down from this level that takes out that price point there. I'm going to delete this to make it clear now because we're down to the, let me see. So let me just take this away now that we've established where we are. So I want price to give me a clear delineation of what it wants to do. So it either has to break this level up here or come down and engulf this candle here. That's the daily candle there. And so for this, so I need that, one of these two things to happen for it to tell me what's going on. In this space up here, I am not going to do a thing unless I see something when I come further down. But looking at the daily, I need to either clear this candle coming down, and I know it's coming down this way, or I want to see clear this level here up here. Now it could go up here and then come back down or keep going. We look at that when we go further down. So H4. Now, this is my personal signature. There are many ways you can set up and look for a setup here. This is my personal signature. I want to see price take out a high or a low on the H4 chart and then go the other way. So this is H4. Again, the colors shouldn't confuse you. They're just my personal colors. You don't need to use colors if you don't want to use them. It just works for me. So for me, H4 is purple. So this is what I'm going to be looking for. I'm going to be looking for price to take out this high. Why? Because it's, one, it's close to it. Secondly, it's very nice and neat. You see this here? When I talk about manipulations and engineering liquidity, this is one of the ways they do it. The people who shorted here, and it's what the retail traders call a double top. So they feel safe. They tell you in retail when you do all your trend lines and stuff, that if price gets to a level twice and respects it, then it's a strong level. That's the banks know that. And so there's going to be loads of traders here. Now think about it this way. If you sold here and you put your stop loss in this region, if you sold to end your trade, you're going to need to buy. So these stop losses are going to be buy stops here. If I'm a market maker and I want to engineer a sell, I am going to want to take, because for me to sell, I need someone who wants to buy from me. So there are buy stops here already. People who have sold at this point and think that this is a good move, and they've left their stops there. If price pushes up into this region, There's going to be plenty of buy stops here, providing a counterparty for a sale. Also, what we call breakout traders who are waiting for price to get here. And their trading style is once price breaks this level, then they go long. Now, they may be right. Half the time, they are not. And so I'm bearing in mind the fact that this could be a liquidity engineering move where the market makers push price to that level, the same way they did down here. So they would have done the same here. Some people would have been here with their stops there, and they've done that. They've taken them out the market. But now it looks like they may want to go for these ones. And when you see double tops or double bottoms in the marketplace, they're candy land. You just start staring at them. At some point, price is going to go clean them out. There could also be some here as well, above this high. And so my personal signature, or one of my personal signatures, which I'm going to teach you today for free, is I'm looking for price to get to that level and reverse. It could get here and keep blowing straight by. That's fine. How do I know when it reverses? That's when I go down to the 15-minute chart. So during the course of my week, I now have, take this even further. Actually, let me delete those ellipses because they look too large on the 15-minute chart. So just look at those pockets there, and we know where they are. I'm just going to take them off now. Right, so you go down to any of the next three charts, like 1 hour, a 30-minute, a 15-minute chart. Let's start with 1 hour for now. Each delineation in the 1 hour is a day. So that's one day. So in essence, this was Friday. I just closed. This was Thursday, Wednesday, Tuesday, Monday. Where are we? What's the nearest level? Now, bear in mind, I'm not drawing too many levels on this smaller chart because the levels I draw on this chart are now just to help me execute my trade. But I'm respecting the levels now from the higher charts because price is going to bounce around the higher chart levels. And while it's doing that, it's going to create smaller chart levels like this high here, this one here, that help me refine my trade parameters. So because I'm here on the daily, on 1 hour, this is a day, I want price to give me a signal. If it breaks below this level here, it's telling me I'm probably looking short. If it breaks above that level here, I'm probably looking long. But remember the liquidity that I told you could generate? So price could come down here to generate liquidity, take out the stops here. Think about this again. If people bought here, looking to go all the way up, they're going to have stops here. If they bought, their stops are going to be sell stops because to end your trade, if you buy to start, you have to sell to end. They're going to be sell stops here. If I want to push price further up the marketplace, I want to buy. I need somebody willing to sell to me. And because I'm a market maker, I have huge orders, I need to fill millions of dollars of orders. So I'm going to come somewhere where there's likely to be plenty of sell stops or sell stops because I want to buy. So price could come down here. So during the course of the week, I'm looking now for price to take out a high or a low and react the other way. If the week's going to be short, I want them to get here or here and react going the other way. If it's going to be long, I want them to come here, or they could all come all the way down here and react the other way. So this is what I'm going to be looking for. And I'm usually looking for this on a Tuesday or Wednesday. It can happen on a Monday, but I'm usually looking for a Tuesday or Wednesday. Why? Because, and I showed you this at the webinar we did last Sunday. If you look at, and let me go to another chart now. If you look at any candlestick on any time frame, there's an open. If it's bullish, there's an open here. That's the open. And let me use a bigger one. So there's an open down there. There is a high. And then there's a low and there's a close. And price will usually, if it's a bullish day, usually 70% of the time, open go further down to engineer liquidity, come back up, travel the full range of the day, and then come back down and close somewhere. So, actually that's a 1 hour chart. Let's look at a daily chart. So you see this day here? It is I showed you this last time. Let's use a recent one. This is the 30th of September. If I go to the 30th of September on my chart, you'll see what I'm talking about. 30th of September. So price opens here. If you can see that, it opened up there. That's where the day started. It went a little bit down to engineer liquidity into an order area from the previous day, went all the way up. So it opened there, went down 11 pips, then it went the distance it really wanted to go, which is 73 pips, and then it went further back down and closed. On a down day, you see it's the exact opposite. It starts low, it goes up to engineer liquidity, then it goes in the direction it really intended to go. So everybody who bought on this leg is going to get stopped out and curse the market and curse their broker and everything, and then it retraces. So going back to our level here, the same thing for a week. Let me show you that in a week. It's the same thing for a week. Now, this is a weekly candle. So let's look at, and this is why I do it the pairs and the way I do them, because for the week, the 4 hour chart, one delineation on the 4 hour chart is a week. So let's look at a clear week now. A week that was clearly up was this one here. Clearly up week, the 25th of August. So on a 4 hour chart, let's go look for the 25th of August on a 4 hour chart. 25th of August on a 4 hour chart. There we go, 25th of August. So this week here, and you can see that clearly that the same thing happened. 25th of August on a 4 hour chart. No, this is September. I want August. There we go. So this week here, you can see that price. What am I doing? 25th of August. Okay, so when I use word price, I'm just talking about the way the market moves. It's my colloquial expression. So price starts off. Also, this week starts off here. That's this thing here. It in one session goes down. In one session, so in one day, it completes its downward move in one day, and that downward move is about 40 pips. Then it travels the distance it wants to travel. Sometimes it takes 2 days to complete that downward move, meaning a Monday and a Tuesday. So I'm usually waiting for this to happen on a Tuesday, but it can happen on a Monday. Monday is my day off. If it happens on a Monday, I don't care. I let that go. I will get aboard the move. Monday will show me, Monday and Tuesday morning shows me where the market wants to go. Then I can put on a trade during the week. So my preference is the price goes up into that level there, into one of these two levels here, and then comes down again. So that's one way we could go. That's one way we could go. And add all these two levels, it could go up and then come down. We'll need to refine the coming down on a smaller chart. Or I want to see it do the exact opposite. I want to see it come down from here into one of these levels and go up. Either works for me. I prefer the first option based on what the price action looks like. I am 60 to 70% convinced it's going to go up first, but whichever way it goes, I will make money if I am patient and I let it show me its hand. So that's what I'm expecting to happen. One of these two things to start the weekend, and I follow on from there. Coming on now to a 15-minute chart, which is my execution chart. Those levels are still. Now, let me show you how I traveled my week. Now, last week for me was an off week. So I figured out price was going to go up last week. How did I do that? Again, let's go back there. This is how I figured that out. I looked at this here. It came down into a level. Remember, there was an order block that I showed you that I took away, a brown level there. When it came into that level, I expected a short, sharp reaction. And when it gave me that reaction 2 weeks ago, I knew that this week, remember, as at last week, this time Saturday, this candle had not formed. So this time Saturday, my chart looked like that. But based on this, I expected it to push up into this level here, which it did. So it was right. And so this is what I did. There are two ways I could have traded that. Look at a 4-hour chart. Let's go back to the week on a 4-hour chart. The two ways you could have traded that. Way one is, so this is where the week started. Remember I said, if it's going to be an up week, it's going to go down first. It did go down, right? Then it's going to go up. It's going to retrace. So if you're an intra-week trader, means you want to put on one trade and hold for the week. You're not interested in coming in and out every single day. You don't have the time, the energy. You get confused when things move up and down a little bit. You just want to get in once and get out once. Maybe get in on a Tuesday, out on a Thursday or Monday or Friday, whatever. This is what you do. When price opens on a Sunday, so when 4-hour level, remember I said my analysis chart is a 4-hour. So the majority of my lines will be in purple because they're coming from a 4-hour chart. That was where price opened. I'm trying to draw a straight line here. So price opened there. In essence, you're waiting for price to dip below that line. Now, there are weeks where it just takes up and goes up straight. Fine. Once in a while, you're going to say, I should have gotten that trade. I didn't get on it. I could have made money. I didn't. That's okay. Let me take these off because they're starting to confuse me. That's okay. You got to be willing to pass up on money you could have made for higher probability setups, meaning you want to be 70 or more % sure that your plan is going to pan out. You don't want 50-50 or less, because losing money can hurt your confidence. Now, if you followed your analysis, it was solid and you lost, that's fine. But if you're just going willy-nilly, putting on trades here and then, you start losing money, you get gun shy, and then when real good trades come, you don't take them. So 70% of the time, if it's going to go up, it's going to come down first. So you draw your open, and you only take a trade when price makes a reaction beneath this level. So when I say reaction, what do I mean? I'm looking for what I told you, a stop hunt of a weekly level. So last week, I'm looking for a weekly low. What were the weekly lows that had already formed again? As at last week, remember, none of this has happened last week. This is where we were in time when last week started. That's where we were. Our chart would have looked like this on Saturday last week. So what are the weekly lows? Or for the 4-hour lows? Again, remember I started with a weekly, so I'm coming down to the 4-hour. I use the daily to give me a direction. If I started with the monthly, I would come down to the daily. So if I start on the monthly, I'm a swing trader. But because I am an intra-week or intra-day trader, I start on the weekly. I'm looking for moves that I hold during the week or daily basis. So my analysis is on the 4-hour chart. It works all the way down. You can start on the daily and end up on the 1 minute. The same principles work. But the higher time frames you're working with, the more trustworthy the signals are. So a 1 minute time frame, 5 minutes, 15 minutes, those are a bit sketchy. You want to be 4 hours gives you some good quality that the signal is trustworthy. So these are my lows. So maybe these are the lows that I'm going to be working with. If I was in the marketplace this time last week, not you. These are the 4-hour lows I would be working with. that one, and this one. Of course, this 4-hour low is already delineated by daily chart. So if a level if multiple time frames have a level, just leave it as the highest time frame possible. So this is also a 4-hour level. I could put a 4-hour line there, but because I already I could put a 4-hour line there, but because I already have it as a daily, I'm just going to leave it in green to let me know that if I do get there, I really have to respect it. And so going back in time, into the week, come on, I would have drawn these lines out. I would have drawn these lines out across the entire week boundary. Delete that. Do this. Across the entire week's boundary, waiting for price to get to one of them. Waiting for price to get to one of them. And then when it gets there, I move. So bear in mind, at the start of the week, I didn't know any of this was going to happen. I just formed a bias that I was going long, that I thought the week was going to be long based off my weekly analysis. If the weekly analysis doesn't tell me much, like this next week coming is a bit more confusing because we're already now at the price pivot level. So I'm going to trust the daily to tell me that. So this next week, I'm going to be trading in blocks of days until price establishes a clear weekly pattern again. The weekly pattern for this week is not that clear. It was last week. So I'm waiting for price to get to any of these levels, 1, 2, 3, and give me a strong reaction. This is the strong reaction I'm looking for. I want a daily, so a 1 hour, a 1 hour market structure break. I'm going to have to teach market structure break to some of you, but Glenn, you should know what this means. But it just literally means that price took out a previous high or low and went the other way. I call it a turtle soup or a stop hunt. So these are the levels: Friday, Thursday, Wednesday, Tuesday, Monday. So this was Monday. Price opened up here. This is the first level. So I'm watching. Did it get to this level? No. Do you see what I mean? Now, if I was a day trader, I would be going off the hour levels. But because I'm doing the week trader, price did not get here. Did it go up? Yes. Did I take that trade? No. Because you can see that it would have come back down and stopped me out. You know, type yes or no if you see what I'm talking about. It would have come back down and stopped me out. So I would have said, hey, I'm making money. And then what's happening? My money is disappearing. And I lost. Could it have gone up from here? There are weeks where it takes off on a Monday and doesn't come back without coming to that level. Great. Then I recalibrate during the course of the week, because you can revisit your analysis during the course of the week and make adjustments based on what the week says. But I am doing nothing till it gets here. This is my first level, right? Now, on Tuesday, it got here. So let me mark this out real quick for your just so you can see what I'm talking about. So this was Monday. That's Monday. That's Tuesday. That's Tuesday. That's Wednesday. You get the point by now. And this is Thursday. That's Thursday up there. So when I say Monday, Tuesday, Wednesday, you know what I'm talking about. And of course, that will make this here Friday. So Monday for me, no trade. Intra-week basis. Now, if you're a day trader, if you want to go in and out on the same day, great, excellent. Excellent. But as an intra-week trader, no trade. Tuesday, we get to the first level. Now, I'm looking for a 1 hour engulfing. And engulfing kind of pattern, again, we're going to look at this for the new traders, is where, for instance, we're going down. See this down candle. If an up candle goes now, it has to close the range of the down candle. So that's the range there on the 4 hour. So if this is the last down candle that I saw when it got to the level, that I saw when I got to the level, that was on the Tuesday, right? There we go. I want to see proof that price comes back. So price is going down, and then it started to turn. Here, I'm not in the trade. Here, I'm not in the trade. Here, here, price goes back across that level. So it hit my pre-week level. It confirmed this to me on my analysis time frame, the 4 hour time frame there. That's a signal for me that my hypothesis of a long week was correct. At this point, I will then enter my trade here. So this is my tool for entering a trade that calculates for me. The blue line is my entry level. The red line is where my stop loss will be. And the green lines are my profit objectives. So if I enter here and I set my risk to 1%, so on all my trades, I'm risking 1% of my account. I don't want to risk more than 1. Those are my risk parameters. And I would advise not to risk more than 2. So it's a 20, where it says 197 pips. Just ignore that. Ignore the last bit. It's a 19.7. MetaTrader just, let me get Solomon in. MetaTrader just, welcome Solomon. MetaTrader just reports that wrongly. So last week, if I was a weekly trader, my trade would have been entered there at the blue line. That's when it triggered my analysis. Put my stop here. Why here? 2 reasons. 1, I believe this is now the low of the week. Based on what I've just shown you already, with the week started here, I drew my line out. I was waiting for a 4 hour stop hunt that was confirmed. I now believe this is my low of the week, so I put my stop there. The conservative way to do it would be to put your stop below the next H4 low. But you can see they are the exact same level. Now, if price had reached here and then turned here and gone up, rather than putting my stop there, I would have brought it all the way back down to here because of this low here, right? But since they are the exact same level and the next one is quite far, now to be on the really safe side, if it breached this point, what I would have done is actually come down to this one here. So that's this one down there, right? But either one works. To be aggressive, let's just use that one. Or to conserve, let's use that one. And so you put in your trade here, and then you hold till you get to a level. So as you can see, on Wednesday, I would have made 1%. That would have been 23 pips, 1-to-1. I would have sat through the price retracing on a Wednesday. It looks like it's eating into my profit. I don't care because I'm holding for the week. On Thursday, it really shot up, got up to about 3%, meaning a ratio of 3 to 1. So when we talk about risk to reward ratios, 1 to 1, 2 to 1, 3 to 1, it means you want to have a trade that's paying you more money if you win than it would have taken from you if you lost. That way, if you bat 50%, if you bat 50% of your trades, meaning you lose one for every one you make, you win. If you're making 3 times or 2 times as much on your wins as your losses, you're going to make money. And then on Friday, it went up one more time to roughly about 4%. Right? Now, this was the level at which I closed my trade on a Friday. How did I know to get out at this point for the week? Very simple. So let's put that line there. Let me remove those. I'll give you this as part of your mentorship. I'm going to give you this indicator that helps you. Solomon, so you're asking me a question. This for me is how I figure out where my entries and exits are. It's an indicator that just, I put the blue line to my entry. I draw the red line to where my stop loss should be. And then it gives me my profit targets. So now, remember, I drew this line here. So let me move that. Now, when you see this kind of line on my chart, for those of you who look at my charts on a weekly, on a daily, on a regular basis, when you see a black line that looks like this, it means that for me is a price objective. It's a price objective. So it's always in black, whatever time frame I'm on. It means I'm waiting for price to get to that point, either to get into a trade or to get out of a trade. So for instance, during the week, once price turned here and started coming back up, I would have put a price objective down there, somewhere in that region, that tells me look for that level. Now, let's look at this back on a 4-hour chart. What's significant about that level on a 4-hour chart? Very simple. It is this bit here. This again is what I call a price pivot level. So Solomon, when you ask me about how I do my pivots, well, this is the first part of the answer. It's not the full answer, but it's the first part of the answer. Some people call it order blocks, supply zones, demand zones, things of that nature, but levels at which we expect price to move. Now, let me show you one of my other charts to show you that this is not just hindsight. Let me show you a chart that I was actually working on during the week. There we go. During the week. So there we go. You see that I drew that out during the week? I knew there was, especially at the end of the week on a Friday. I'll teach you about this again moving forwards, what's likely to happen at certain times of the day, certain times of the day or certain times of the week. So when I get to a Friday, towards the end of a Friday, and I get to this kind of level on a 4-hour chart, I know it's more than likely that price is going to go back the other way and wait till the next week to move higher, if it's going to go higher. So in that level there, I'm looking for price to get into this box somewhere and turn. Where do I expect it to turn? This is stuff I should charge you guys for. You won't find this anywhere else on the internet. And for those who didn't even attend the webinar, I don't even know if I want to show them this. But where do I expect it to turn? Somewhere around the middle of the order block or that zone. So what's the zone? It's this level here. I'll take this one here, the bigger one. So the last time price moved downwards significantly after it was going upwards, roughly in the middle of that zone, somewhere near the middle. Now, this is a trick that I've learned. Market makers like to use, one second. They like to use certain price levels in 10s or 5s. So when you're looking at pips, you're literally looking at the last 4 digits after the decimal point, 1057. So I want to round that up to either a 55 or a 60. 55 or 60. Since we're coming from up down, I'm going to go to the lower number so that I get out conservatively before the price turns. So I'm going to make that 55. If we were coming from down up, I would choose the higher number because that's where we would get to first. So 1060. So that's where I predicted the week was going to end. Now let's look at that on a 1 hour chart. Can you see how almost perfect that is? We started down there. Let's look at this now. Let's put this in. We took our trade down there. We put our stop loss here to take into account this this level there. And if we had held all the way during the week to that level that I delineated, we would have made now on this account. So if we had risked roughly 1,000, we would have made almost 4,500. That's pretty much 5 to 1. That's a risk to reward ratio of 5 to 1, meaning I could lose my next 4 trades and still be in profit. I could lose my next 5 trades and have broken even. Just think about that. That's just in 1 week. Now, I like not to be this cute. So for instance, when I put my trades in, let me show you something from, let me see, what account is this? Is this my main account, or let me see what account. Okay. Oh yeah, this is my what you call it now. So this is, I have 2 accounts. One's a dummy account and one's a real account. So I'll put the same trade on both of them, but I do things on the dummy account that are designed to help me learn. And so I'll take bad trades, good trades. I'm testing out certain things. I'll just take, but it's a demo account. So every time price turns, I'll take a trade on it sometimes just to test out certain levels. But this is a trade that I also took on my live account. I just duplicated the same trade. Now, look at this trade here. So let me remove that 1 second. That's not what I'm looking for. Right, so let me remove that thing, make the chart a bit cleaner. When you drag a trade and you drop it on your chart, it does something. It will show you where you got in. That's this tiny dot down there. Where you got out, that's this one there. And where you initially planned to get out when you took the trade. So where you set your take profit level from, it'll also show you your stop loss. So that's the stop loss there. Let me make that bigger. That's the stop loss down there. That's the take profit up there. This is where you get in, but the candle is blocking it. It was somewhere around here that I got in. But you see where I initially put the trade to end? It was short of that level, usually about 5 pips short of my perfect level, because I don't want to be too cute. You don't want to, you're not trying to get out at the exact exit in case something wrong happens. Now, I closed the trade early because, like I told you guys in the experience group, it was a news day. And because of the way the price was going with the news, I just wanted to be on the safe side. But this is where I would have got in essence, because I was trading daily during that week based on what my weekly range was. So I first did this analysis for my week, and then I was jumping in and out every day. I'm going to show you that in a second. I was jumping in and out every day. So on Friday, I jumped in here. I put my loss somewhere where I thought it was going to be, where it was safe. And because we were at the end of the weekly range, I put it there. Now, let me show you again. This is a demo account. So the things that I'm just testing out. Let me show you this one here. what day was that? What day was the 8th? The 8th was, yes, that was a Tuesday. So while I was waiting for price to come into my level, so you can make money both ways, you see. Let me go down to a smaller chart. Let's use a 15-minute chart so that you can see what it really looks like. So on a Tuesday, while I was waiting for the price to go down to my level, remember I said I was waiting for here to take the weekly trade. I said, hey, let me make some money while I'm at it. It was risky, but I said, hey, let me try something out. So we were up here. We came all the way up here on a Tuesday. And I knew that was false. I knew it was nonsense, right? I knew price was really trying to come back down here. So I said, okay, I'll take that trade down into that level. So I got in here. I put my stop there. And notice again, I always come out a few pips. That's the level I drew. A few pips short. So that was this trade here. It was a conservative trade. It traveled a fair distance, but I put a lower lot size on it because I just wanted to, and then go on. Now, on my other account, I actually took my live account, I took the trade up because that was the direction I was really going in. But this is why a demo is good. You can test out certain things. I want to say, you know what, if I'm expecting price to come here and then go in my direction, I should be able to get out, come in here, take a short trade, make some money while I'm waiting for the setup, and then go the way I really want to go. So, all right, let's wrap this up real quick. So that was if I was a weekly trade. Now, if I was a daily trader, I would be looking solely at the 15-minute chart, right? So first of all, I'd still be waiting for price to come down to my weekly level here. But now let me see. So I need to wrap this up in 5 minutes. So this is Monday. So it opened up on Monday. Usually on Monday I wouldn't trade, but I'm expecting a manipulation. I'm expecting price to go above the open of the week. That's the weekly open in the purple. So it starts here. I want the price to get above that level. Actually, I can refine that now that I'm on a 15-minute chart, because when you refine levels from one to another, sometimes you need to bring them down a little bit because of scale. So this was actually where the week opened up. So there, good. So I want price to go above it, come down into one of these two levels here. So it went above it here, came back down there. I wasn't buying it because I knew it was a manipulation. But on a day chart, this was a valid trade. On a day, if you're going to go one day at a time, you could come in here. 1 second. So on a daily chart, you could come in here, right? Let that reaction happen. And then, but you're in and out in one day. So on that particular day, Monday here, get in there, put your stop loss, what you think the close of the day is, or the more conservative way to do it is to put it at the previous low from the previous day, so down there. So here, the previous low from the previous day. We would have made 2 to 1 that day, and we're out. Immediately, we're out. 2 to 1, and we're out, right, on a Monday. So 2,000 roughly on this account level, and we're out. Then we come to Tuesday. Again, I'm still waiting for price to go down there. So on a Tuesday, it starts to rally. It goes back up above the high of the week. Once it starts to drop, see what happened here? Once the price dropped sharply beneath that point, my experience told me, aha, now we're going to the real level. But rather than spend the whole day waiting, why don't I make some money? So short there. Short means sell. In this case, I'm flipping my stop loss because since I'm selling now, my stop loss has to be the other way. Put it there, which was above this candle here. It's a very risky trade, but, and then I was out real quick, real quick, So I made I only risked $330 on this one because it was risky. And then we're in down there. Now, once we get to the level we're really looking for, now the magic begins on a daily basis. Now the magic really begins. How does the magic begin? Simple. We've got down there. Price has come back up there. If we're a weekly trader, we put our entry there, stop loss, then we go. But since we're a daily trader, we're waiting for mornings, 6 a.m.s to 10 a.m.s, and for 12:30s to 3 p.m.s. That's where the magic happens. So we come here. I'll show you this later. This is a consolidation range called Asia. I want price to go to it and then come back down, right? Come back down, back into that level, and then give me a reaction. Still at that same level. So I put my, this thing is getting on my nerves, need to close, got to go pick up my kids on my birthday party. So I put my entry there, at that level there. I put my stop loss, where did I say to put it? Usually beneath the previous low. So that's the point at which it told me the trade was live. This is the point at which I entered. I don't put my stop loss there just in case that's not the low of the day. I put it at the previous low, the next low before that point. And that day I would have made 1%, 2%, 3%. 3% on Tuesday, that's £3,000. If you're trading with £1,000 loss each. Then I close my trade for the day there. Why? Because we're into this level. The previous day's high, we're coming to that level, into that order block level. So I'm out, I'm going to be out here. And I would actually be out at this level here. Why? Because it's the weekly level. Remember I said, it's a 4-hour level, sorry. 4-hour levels, you respect them. That's the level at which the week opened. Isn't it interesting? Price gets to the level at which the week opened and it starts to retrace. So I'm out here. I come back on a Thursday, allow it to figure itself out, and I repeat the same process. Between 6 and 10 a.m., usually around 7 a.m. in the morning, what does price do? It comes back down to my level C. Look at how it's respecting those levels we already drew. We drew those levels on a 4-hour chart. We drew them before the week began. Look at that. The price is respecting them perfectly on an intraday basis. And this is where you look like a genius when you post trades on the group and people say, wow, this man can trade. This is why. It's simply this simple. So again, the same way if a week is going up, I wait for it to go down. If a day is going up, I want a down movement into a level. I want a down movement into a level, right? And then a reaction that confirms to me that the trade is viable. That reaction would be there. It moved down here, then go off there. So again, I put my entry. I put my exit or my stop loss, not at that point, but at the previous point here. And on this day, 1%, 2%, 3% again. So that's 2% on a Monday, 3 on a Wednesday, 3 on a Thursday. And then finally on a Friday, because we've not reached the weekly objective. Now, if we got here on a Thursday, that's it. We don't look for a long on a Friday anymore because we've reached the higher time frame objective. But because we haven't reached it here, we still know there's space on a Friday, which is the trade I showed you guys on a Friday. The same principle again. Now remember, this is a daily level here that I drew out here. Look at how price respects that. Look at it. Look, I mean, it's textbook. You can't make this stuff up, right? Again, I wait for the manipulation the wrong way. Wait for it to go the right way, which is when it engulfed it there. I should have been in the trade there, but I entered late. Now, usually it would be here, but because this is where we are now, put this there, right? 1%, 2%, 3%, almost 4%, and then we go. And so that's how the previous week's analysis can help you with the coming week. Now, I've got to shut this down here and run. Tomorrow evening, or probably later this evening, I'm going to record I'm going to finish my projections for next week that I already started and see what we're going to be expecting next week. And then we will go from there. Bless you guys. Love you. Have an amazing weekend. See you tomorrow. at 8:30. The second, or my personal analysis from today, I'm going to post it on the group. Take care. Bye bye.